So,
Hey,
welcome everybody. This is another session for webinar for real estate investments. I'm expecting people to come to this investment and learn tons of it. I'm not holding anything back. It's all yours. So you're going to have my many years of experience in real estate investment. Feel free to ask questions if you want, if you have any question or if you need any of the resources I'm sharing with you. Feel free to email me. My email is right there. It's deltaland123@gmail.com, and my number, you can always give me a call. I know some of you call me here and there, ask me different questions. By all means, my number here is 647-407-4049. There are tons of four in there. Okay, so I thank you for Mr. Florio to come to our webinar today. Mr. Florio has many years of experience in mortgage. He's well connected to different resources to where to go. Some of these mortgages are not straightforward, so you need specialists to come and step forward and put the deal together. And this is to have a package in different ways, because the lenders, they don't usually see, or they don't want to see packages that is difficult. So what John is doing for them is package your offer or your investment in a way that they understand. So it's a strong bridge between you and the lender. Am I right, Mr. Florio?
that's correct.
Perfect, good. Okay, so John's information is on the screen. You can also ask him questions. I'm going to ask him further down the road some questions that we have here. You can always reach him at 416-402-9097. So let's start our today's webinar. I took it as much as I could. I improved it. Some of you are familiar with this screen. Just for those of you who were not here last week, my goal for this real estate investment webinar here is to move you from where you are, and hopefully you're not a speculator, you are already into real estate investment, but move you from speculators to a savvy investor. And that's where you are really see the game and would you enjoy it. So the things that I hear from a typical speculators is, oh, I assume the market is going to go down, or they see a property, they see, I hope this property goes up, buy it for me, or I wish. Some of them are coming to me, said we want to buy this land, and they say why, and immediately say, well, I hope one day it would go up. I wish this going to come up with price better growth, or I guess, listen, everybody says that buy land because it's going to grow, and I warn those people to stay away from all those feeling things, stay with numbers. And immediately I tell them, can you show me the growth? And they said, no, we don't. Then why you want to go with something that is unknown? So I help them a lot in that sense. So this is from speculators moving to savvy investor. Now, another thing with speculators around, they are blown up with any wind, left or right. They don't know, they haven't made their mind, because of course they're not counting on numbers. So if the cousin said the market goes down, they think the market goes down. If uncle said the market goes up, they follow the uncle. Around the table or barbecue, a lot of conversation in that regard. So your right and left blown up by the wind. Rather than I put a sketch here. The cartoon said idea selection, analysis, data, teamwork, checking the feedbacks, and successful. I cannot see it. Right. Now, when we are getting into real estate investment, we are going to see a lot of talk from media coming into us. The reality is there, but as a savvy investor, we have to look into the common area that is touching the truth. So for an example for that, here is real estate market is crashing. Everybody can see my screen? John, can you see my screen?
Yes, I can.
So on the very top said real estate market is crashing. This is a very typical sentence or news that I see every single day. Now, if you pay attention to that, it's technically said real estate market is crashing. Question here is where? Some areas going down, but some other areas coming up. So we cannot generalize the real estate investment. As we always said, real estate investment is not global, it's local. And terminology we come across: average price, day on the market, absorption rate, transaction, listing price, could, may, perhaps. So these are the buzzwords you have to read between the line. Now, very confusing market. This is what we have right now, and it's not even one single person that would confirm what's happening in the market. Even the big companies, Remax is fighting with CMHC. Other banks are commenting. So even on the higher level, people who are working with data, there is a confusion there. I'm going to pull out some of those data for you here. This is one of the news I grabbed this morning. Said average sales price in Oakville up nearly 10% from 2019, despite of pandemic. Okay, this is June 9 from yesterday. I, as of curiosity, pull out this data this morning. Just wanted to compare it. This news is not that off, but it's always good to check it. If you look at, let's say, 1 year, because it said from 2019. If you look at this section, said 1 year. Let me see if I can grab a pen here so I can mark it for you guys, so you can clearly see. So 1 year. Mr. Florio, do you see my pen?
Yes.
Okay, so we're talking about Oakville. Oh, this Zoom is good. Okay, so generally speaking, it's 4.92, but I see some trace of higher number here. Let's say around 7% growth in 1 year, or 6%, or 7.45. So this news is not that off when it said the market went up 10%. Here is confusing news everywhere. Said 5 years fixed mortgage rate drops to 1.99 for first time in Canada. And I have to double check with Mr. Frolier. Is that right?
I would probably say it's great advertising.
Okay.
It may be in a particular province. It certainly is not in the province of Ontario.
Okay, good. See, this is the news, and we think it could apply to where we are. And it clearly said Canada. So you're right, John. Here's another news. This annotation stays here. Okay, let me just see if I can remove this annotation here. Clear. Just bear with me. Okay, I think that's going to happen to all the pages, so I'm going to remove it. Perfect. Okay, so here it said Toronto home sells in May up from April, but down significantly year over year. Condo prices dropped in some Toronto neighborhoods. It didn't say in Toronto, it said some. New data suggests, okay, so they're not sure. CMHC see declines in home prices, sales starts that will linger to end of 2022. My goodness. Toronto area home sales and listings show signs of rebounding in May. So a lot of confusion here. Everybody says something and no one really knows. It looks like the market on 2017, when no one expected the market crashes and everybody say it's good market, and all of a sudden, despite of anyone's thinking, it went down. So here's another news. Toronto home sales up 45% in February from a year ago. So the news is all over. No one knows what's really happening. And everybody's guessing or suggesting. And many of them, they said could. So you have to be careful for that. Toronto area home sales and listing shows signs of rebounding in May. This is from last week, I pulled it up. Here's CMHC's big news. It said 18% drop home prices. And if you come down, pay attention here, it said price could fall. Mortgage deferrals could jump. Mortgage arrears could drop. So there are a lot of could, so no one's really sure. And here's another one. Remax is fighting with CMHC. Said Remax calls recent CMHC report panic-inducing and irresponsible. So they are fighting up there. Now look at the data that they pull out recently. I pulled it up last week. It's the same as last week. So here, minus is not the price. Minus 53 is not talking about price here. We're talking about transactions. Of course, there are less buyers in the market or sellers because of this pandemic. You're not sure. So there are less homes coming into the market. There are less transactions. But if you look at the right side, you're going to see 3%. That's where you may want to pay attention. That selling price went up compared to 2019, 3% higher. Now, I wanted to bring up this conversation today of how I bought my investment with zero down or no money. And before we get further, I want to ask Mr. Florio, going back to this confusion of the markets happening right now, can you give us your input since you are in the center of mortgage?
Well, I just want to address a quick comment, if I may, from what appeared on the screen. One of your attendees have noticed that HSBC has that 1.99 rate that we talked about. HSBC is a bank that's right across the country. I would like to just mention to the gentleman, Harry, I believe it was, that put that up, that that particular rate has a lot of stipulations or what I call fine print to it. And it is a what I call a loss leader type of product. Mm-hmm. Not everybody qualifies for the 1.99. So I just want to make sure sometimes what you read and what the reality is and what you qualify for or what their prerequisites are far beyond what the average Canadian can sort of qualify for.
Okay. And how do you see the market? You're not going to hold you responsible for what you're saying. I see every single day there is news that is really confusing if you don't know what you want to believe. So you may want to choose to believe this way or that way. So what do you think?
Well, Ashton, my opinion is that a lot of people are not making any, shall we say, confirmed opinions. The reason being is there is a lot of uncertainty in the market. Mm-hmm. The way I look at the market right now is there are a lot of people running scared. They don't know how to read it. They don't know what's going on. A lot of the lending institutions are providing special rates. They're providing, let's call it, let me see how I can attract a new buyer. They've been focusing a lot on refinancing, knowing that some of the sales numbers have dropped. But at the end of the day, you have to look at two of the most important things that keep the economy going. There's a roof over our head and a career that pays for that roof over our head. If there's going to be a correction in the market, I don't think we're going to see a crash, in my opinion, that will bring $1 million home to $500,000. That we're not going to see a crash that may bring a home from 2 million to 1 million. We're going to see some slight corrections depending on the pocket and the market, but we got to keep reminding ourselves that both Montreal, Toronto, and Vancouver is where the main population of the country is. Mm-hmm. We've got a lot of activity. We have a lot of immigrants coming here. The supply is short. The demand will always be high. So I think that once the dust settles and we will overcome this sort of unfortunate pandemic and rough times, I think that you will see the market get back to its normal strength. It might even come back better than when it was. And there's going to be a pent-up demand. And we're going to have conversation, I should have done this, I should have done that. And I think people will second guess or be the Monday morning quarterback. But right now, I think what you need to do is look at your particular needs and assess exactly what is it that is of interest to you. Is it an investment property? It is a roof over your head. Is it an upgrade? Is the upgrade the right time to do it? What market do you want to go after? Do you want to go to a market that's $500,000 in what you have? But then you got to look back and say, does my income, shall we say, support that? What a lot of lenders have done as well recently is they've looked at what's going on in the marketplace, and they're being a little bit conservative on loan to value, the type of work that you do, the industry that you're in, their TDS, GDS. They're looking at missed payments with a little bit of a more fine tooth comb. I know that Equifax and TransUnion have not reported missed payments to reflect the numbers or the scores. So that's sort of when you're looking at a resume of someone's credit, it's a bit misleading because this sort of missed payment has not been recorded in the score because they've actually decided not to include it. But when the markets get back into place, adjusters are not going to, underwriters are not going to look at that from that point of view. They're going to look at the fact that you may have missed, that you've over leveraged on your credit. So look at what you need to do. Look at why you're doing it. Do not be emotionally motivated by your decision, but be factually motivated. And sometimes it's not the I like to have. It has I must have should be the approach that you use. You must have a plan in today's market. I would say probably from now to the next year in order to navigate it properly without being, shall we say, shortchanged or being caught off guard, or you may end up paying the price because there's nothing worse in the marketplace than having on your credit record that you've missed a mortgage payment.
Now, there are deferrals happening right now in the market for the mortgage. First of all, do you know the number, like or percentage? Secondly,
I'm sorry.
I'm
sorry, Ashton. Can you repeat the question? I lost audio there for a quick second.
Okay, so there are many deferrals happening, mortgage deferrals in the market. First of all, do you know how many, like the percentage of people went for mortgage deferral? Secondly, what's going to happen after this pandemic is gone? People have to start paying back and they are laid off. Any feedback here?
Well, let's look at the actual word that is being used. The word is deferral. So when they defer something, they have to put that number somewhere. So they put it back on what we call the principal amount that was borrowed towards the home, right? So if you had a $300,000 mortgage and you had $10,000 referred, now you really have a $310,000 mortgage. Mm-hmm. So what is the number? It is a significant number. No one has put a finite number up to now. They're sort of estimating, guesstimating, and all that. Yeah. But the banks will put out that information, or CMHC will, or the Credit Institute will. But it's not a scary number, but it's certainly a number to be concerned. And these are people that may have leveraged themselves, that have bought more than what their, shall we say, income level may have given them that rainy day parachute, if you will. But I think that what we have to look at overall is it's a deferral. It's not a forgiveness. And a lot of people tend to think that when they hear the word deferral, that means they're not going to be paying for those 3 months. So if you keep that in mind, is you're no further ahead. You've just sort of delayed your commitment to the bank for 6 or 7 months, whatever it may be. But the bank will get its full.
Are we going to have that one fire back on us as consumers?
I don't think so, because Equifax and TransUnion have decided that they will not be reporting that. It is an agreement between you and the lending institution, so that will not be reflected on your credit score. Okay. What will be reflective of the fact is that the amount that you owe will change. And they're dealing with deferrals on a case-per-case basis. Not everyone is granted a deferral. It is based upon your personal financial scenario, liquidity, cash flow. There's a lot of factors that the bank look at before they grant a deferral.
Okay. There is a question that said, if buying a first property and not sure if you will live in it, depending on companies providing working from home, is there a minimum number of months you have to live in that property in order to avoid possible mortgage fraud?
Well, each institution has their own guidelines. If you buy a property and it's your first time home and you're not going to be living in it, then if you fail to identify that that is not the case, in other words, it's not going to be your principal residence, you're committing misinformation on an application of a mortgage. It's considered an investment property, right? But if it is your first time home and you decide after a period of time that you want to move out, each institution will have different timelines that as to what they may consider to be your principal residence that you may have lived on. But I've seen people stay in their home for a month and rent it out. I've seen people stay 6 months. I've seen people stay, 8 months. Check with your mortgage broker on what lenders will look at. Some lenders don't want you to do that, but it really depends on your own personal case. I would say that if that's your intention, be upfront with your broker, let them know that you're buying this, that you're going to stay there temporarily, and then you're going to lease it out or rent it out. And I know in most cases you should be fine. There's no set timeline that's written in stone that's governing the whole industry.
As far as my experience, no. As far as my experience is, if you continue paying, no one's going to bother you. The moment that
No,
you
no.
stop, then they come say, "What's going on here?"
Yeah, yeah.
Okay, thank you, John. So let's continue here. How I bought investment homes with no money. Anyone likes this subject? You want me to elaborate on that? Just say yes. Just type something for me. At least I get some encouragement here. Okay, I got the first yes. I need one more yes. Come on. John, you want to push another yes? I think someone's writing. Okay. Yes, please. Okay, so that's good. A little bit of clarification here because it's hard to squeeze everything into one sentence. And I think that was John's question as well. How I bought investment with homes with no money. It doesn't mean zero down, okay? Most of the time when you buy a house, you have to have some money as a down payment, let's say 5% or 10%. There are cases you can buy money with zero down, but that's a rent to own or lease to own. In that case, someone else is buying it for you, but even that one, you have to have a little bit of money, but that's totally different idea there. So what I meant here, I bought investment with zero money from my pocket. Actually, I didn't pay even a penny until the moment that I sold it. So how does it work? The simplest version of that, if I want to put it into one word, two words actually here, it's going to be joint venture. Okay, so how it works is let me tell you my story. When I start thinking of investing in real estate, of course, I have a limited budget to buy my property. So I had my own home, living with my family. Then I came to a point, I told my wife that buying real estate investment is one of the best investments you can do in Canada. The safety, security in this country, the economical backup and structure is so good that it's kind of guaranteed growth of the property. So long story short, after almost a year and a half, 2 years studying, reading, going to seminars, we didn't have webinars at that time, going through the material, reading books, then I decided to buy my first property. Actually, what you see here, the picture is my fourth property here. So I bought my first property, and that was in Kitchener-Waterloo. And it happened to be a semi-first house, not that elegant as the picture you see here, but that was my first investment. I didn't have much experience, and I quickly rented. Kitchener-Waterloo is a strong city. Kitchener-Waterloo, Cambridge, we call it Tri-City. For many, many, many years, it is one of the toughest, best choices for real estate investors because of multiple industry in these three cities and two universities that are there and few colleges. So you can get a property with good price and immediately rent it. There are a lot of people renting in that neighborhood. So I bought my first property, and then the result was good. Months after months, I was receiving cash. I was making, I think, $200 positive cash flow at that time. It was a great investment. It was growing. I was very happy with the tenant that was there. I was very happy with the tenant that came, a nice family with a kid, and they stayed there on every single month. They were paying, no problem with the house, no maintenance needed. I had a maintenance company taking care of the cases there. So after a few months, then I said, okay, if you want to buy the next house, there's nothing that we can. I'm just going to block the noise here. Okay, there's nothing that we can find in terms of buying the next house. And we were firm to buy the next house for us. So what I was doing, and I was doing it naturally, I mean, I didn't set up anything. I learned it after that some people are watching me and I'm excited about real estate investment. You can see me anytime. I'm usually by nature quiet person, but as soon as you start talking about real estate investment, you cannot stop me anymore. I'm so excited and passionate about real estate investment. So in any casual gathering, any event that I got together with my friends or families, guess what? The subject going around house, and I was there talking about different things about real estate investment, how it is the greatest one. And before I get into real estate investment, I study stock, daily trader, going options or short, just name it. And I was quite familiar with what's happening with the market, stock market, real estate investment. And I think somehow along the way, caught the fire with some of the people that I was associated with, and they got interested, and they had no clue what to do. So in a way, they had the money, but they didn't have the skills and expertise to find the right property, to put a tenant there, and to maintain it. So, and all of this happens organically. I didn't prepare anything for it. So they approached me, said, "We want to buy a house." And I said, "Okay, why don't I manage the house, find the house, cherry pick the house, going through all the information that I needed in terms of comparison, this house compared to other houses, make sure we're buying the right house that guarantee the growth." And I had all the tools to do that. So what I did, and they agreed, they said, "Okay, you know what, expertise from you, money from us." So that's how the first JV or joint venture got together. And based on every different situation, I was able to manage it in different formats. And let me explain to you. You don't need to always go with someone else to buy a property. I put 50%. You can very much do that if you want to. I put 50%, you do the other 50%. At the end, after 3 years, we sell it, we share it. All depends to different situations. Some people said, "You know what, this is the whole money, and at the end, give me 75%. So you're going to be 25, 75. Some other cases, it's going to be 10%, 90%, or 50-50. All depends to the individual with whom you're working. And then after that, sky is the limit. More number of interested people you can find, more you can make joint venture. And at the end of the term, where is the exit plan for you? You can always finish it or continue. What's happened with some of them is after 5 years, you revisit the house, you talk to joint venture, say, "Listen, there's enough home equity here to pull it out and buy the next house." And that can continue going on and on and on. So for that reason, I was able to buy the second one, third one, and on and on. And I know many other people do the same thing. Some of them, they had 50, even 100 or 200 homes. Many of them are joint venture. And believe me, there are people, they don't know what to do with their money. They don't want their money to sit in the bank, and they are willing to help and take at least a portion of their money in your hand, put it into the property, and go on with joint venture. At the end of the day, it is profitable, and everything should be on the paper with the lawyer. Not most of the time, well, it depends on how you do the structure for your joint venture. The property is going to be under their name, or it could be 50-50, whatever is the percentage. But an agreement should be in place with the partner. Let me see if I can take, okay. So how you can do the joint venture? First of all, you have to have a clear goal and plan of action. It means that you really have to be passionate, and you really have to convince that real estate investment is the way to go. You cannot talk with clarity and with passion to someone that is coming across you. You have a conversation. Put it this way, you have to be genuine. Okay, it should come from your heart. If you have firm belief that this investment would grow in value, then you can proceed. So you have to have a clear goal, and you have a plan of action of when you're going to start, what you're going to do, what you're going to do the first year, for instance. After you're there, you have to educate yourself. At least I would give it a month or two to educate yourself. Get a hold of any books. There are tons of educational material on YouTube. It's a little bit all over. So to put them together, it takes a little bit of time. There are a lot of lot of videos about really nothing with no content. So it's sometimes I find it hard to filter down to the pure meat. And but your training should be intensive. If you want to go a year from now to start your joint venture, then you have 1 year. If you are passionate to do that ASAP because you are coming across people with money, then you have to take intensive training. And for that, I strongly suggest you to have a mentor or trainer to help you with this journey. But you have to educate yourself. And the reason for that here is, believe me, you're going to go in front of other people in an event or a gathering or a party. They are going to bombard you with questions, challenging questions that you might stop. As soon as you stop, you don't know what to answer. Well, their trust in you might not be 100% there. So they want to see someone with authority that stand up and know what is talking about. Take the leadership. So once you finish your intensive training and educate yourself, what I want you to do is to actually step into the market, start exploring the reality of real estate investment. I want you to go see homes. Now there is no open houses these days, but it's going to soon open. So I want you to go to open houses, start comparing neighborhoods with other neighborhoods. I want you to compare the format of the house. Some of them are bungalows, back split bungalows, there are side split bungalows, there are 2 stories. Go to condos and figure out what is the difference between all of them, because once you are in front of people talking, they expect an expert, a savvy investor to talk to them. So if they throw at you a question, what about if you buy a bungalow in this neighborhood? What do you think about bungalow? Okay, or what do you think about having 2 tenants in a house? And all of those questions. Then build up your team of advisors. This is crucial, okay? So I know along the way you come with questions. Let's say you have mortgage question and you have to prepare for the answer. So you can always call, for instance, John as your mortgage broker and ask him different questions. Is there any strategy when it comes to choosing real estate properties? Then you can talk to your real estate agent. When you're choosing your mortgage broker, I suggest you strongly to have an interview, a casual interview. Ask the person if you've done investment before. What are the challenges for investors in comparison with different banks? Is there any packages that each different banks offering to you? When you're talking to a lawyer, for instance, to put your deals together, it's important you're dealing with savvy lawyer, knows all up and down of this kind of transactions. And I've seen lawyers failing and not knowing what to do. And also when you're talking to a real estate agent, make sure that agent, because I'm an agent, I know the situation. Make sure that agent knows a real estate investment for many years. Having one property for investment, listen, many people, they have one property. It doesn't make you an expert in real estate investment. So I want you to ask them how many real estate investment you had, or you're handling, or you're selling all the time. Ask them some challenging question. If they said, listen, let's go take a look at some properties, your best friend is the word why. Always challenge them to ask them why this is a good property. Can you back it up with some numbers? Can you show me the growth for this neighborhood? The form I showed you earlier, let me just see if I can, I'm going to come across that. We call it home price index. Many agents, they have no idea what you're talking about when you bring it up. So it's very crucial for you to grab an expert. So they are going to help you all through up and down in real estate investment. Build up your network. This building up your network, these are the people you are going to joint venture with them. So I want you to do that a little bit earlier, just after you finish your training, your intensive training. Start building up people. When you go to the gathering, just pay attention to the conversation they have together. So you start building your network. If you have a collection of email addresses, their phone number, or when you get together, just connect with them, and then follow up with them later on down the road. Documentations, this is what you need eventually when you agree to have a joint venture with a partner. Then you have to have the full documentations there. Also check with your lawyer to make sure they understand what joint venture means. I have some of those forms that help you with joint venture. They are posted in my real estate investment course that I offer, and form your joint venture. Now, some of the people you might joint venture with, is not a question of trust, but you have to document everything, and everything ahead of time should be clear. Clearer the road is, less confusion would happen. So it's better to determine your relationship with them in regard of joint venture. More document you put together, a better relationship you will have and less surprises. And you will have your joint venture partnership together. And go ahead, invest. Any questions so far? I have a question here. Said, I have been advised to not use a mortgage broker until you have 5+ properties, which main class A lenders maxed out at. So John, I think this is your question. I've been advised to not use a mortgage broker until you have 5+ properties. Heard that. That's
I would like to know who
gave that advice.
the person got the advice from.
Yes, exactly. I don't see any problem with using advice from an expert who cares and has a lot of expertise dealing with investment. I've never ever, it's like, don't ask your doctor if you have a heart attack to give you advice on heart attack. Mortgage brokers are there to help. As I said, at any level of real estate investment, please, please, please do your due diligence. Don't accept anything that anyone said until you double check it and see it for yourself. Agree with me, John?
Yes, and Ashton, I'd like to say that probably the advice came from a banking institution of some sort where they will not lend to anything more than 4 properties. So once that client is no longer a viable client for them, then they say, now you can go to a broker because I can't help you anymore.
Okay.
So they got the wrong advice. You should be dealing with a broker from the moment you decide to invest your first dollar.
Do you suggest someone to double check with the second mortgage broker or no?
Well, I think that what you need to do when you're choosing a good mortgage broker in general, you have to know what you're looking for. It doesn't matter whether you like the person or not.
Mm-hmm.
Ask about the track record. Ask about the type of mortgages they've done, how long they've been in business. Make sure you feel comfortable with whoever's sitting in front of you, that they're not putting, shall we say, their sales hat on first. It should be advice that you feel comfortable that you would get from a friend or, excuse me, or neighbor that gives you a balanced story. A good mortgage broker will tell you the upside of a transaction and the downside of a transaction. Okay. The cost that you will be exposed to by the end of the transaction, so there's no surprises for you.
Good. Another comment here, real estate agent in Southwestern Ontario and also an investor. I think this question is very much saying, is it okay for me to work with that person? Make sure you do your due diligence with that agent. Make sure it's an active agent, it's not a part-timer. Make sure that person's dealt with investment and investors. Ask him, how can we handle a tenant? They can answer you if they've done that and they are good agents. Also, make sure anything they said, and you have to ask them. Tell them which area is the best area. As soon as they point out to that area, tell them why. Listen, they can tell you anything they want, but if they cannot back it up, then stay away from that agent. So same thing for anyone else that you're working with. It is your money, you have to be careful. If you do not know what you're doing, it's like putting the brick one on top of the other one. If you do not set the first brick with the right foundation and solid, you cannot continue building up. It's going to crumble down. So it's very crucial for you to make sure you know what you do. Get help from those people, but make sure they can answer your why. Another question I have here, does it matter where that mortgage broker is based? For instance, using a Toronto-based broker in Peterborough. I think as long as it stays in Ontario, you should be okay. Is that right, John?
Ashton, most mortgage brokers, apart from the province of Quebec, and I believe it's British Columbia, we're able to transact, and we have relationships with other brokers. So we're basically work on a referral basis as well. So I may have a client who wants to buy a home in Nova Scotia, and I can deal with our connected partners over there and letting them know that the client that is doing that. A broker should not be, you shouldn't be concerned on where the broker is located. But what you should be concerned is that you trust, you admire their advice, or you believe their advice, that they've earned their credibility, if you will. But location of the broker should not matter.
I have done transactions for one of my investor. He came from Alberta. I bought him a beautiful mixed use property in Milton, and he preferred to use his Alberta mortgage broker. Done deal. He did a phenomenal job. Okay, so as long as you trust them, they know what they do, and they give you sincerely, they give you all the good information, I think you're safe, as long as they know what they do.
Ashton, if I may just add very briefly, the organization that I represent, which is Verical, we have over 4,500 agents across Canada. And we build relationship with all agents in all provinces and all corners of Canada. So if someone came to me and said, John, I found a property in Nunavut, the chances are that we have an agent that we can call there that has a relationship with our firm that we can refer the client to, that will be looked after as if he were sitting in front of me. But the client has to remember that if he's dealing with me here, even though I may refer him to an agent in Nunavut, what he or she has to understand that I will be looking after the full transaction for them as well.
Excellent. Okay, here's what I review every week is the housing market chart. I want you to understand what's going on with the market. We are looking at, I want you to read set monthly with 3 previous years for comparison. And on top of that, you're going to see TREB MLS sales. So this is the sales, it has nothing to do with the price. So of course, the transaction this year, since COVID-19 arrived around March, start dropping May, April and May, now it's picking up again. So that number of transactions was less. Now this is new listings. New listing is climbing up after April that dropped. So this has nothing to do with the price. This is kind of supply of the market. Now, sales to new listing ratio, this is amazing. I always like it. It said whatever came to the market, it sold. So far we're doing good in month of May. So we are almost 50% of whatever came to the market sold. So the demand is there. Average resale home price. This is what everybody's concern is. Average resale home price. Many people said market would crash in March, April, May, meaning that if you look at the orange line that represent 2020, market crash, that should have been half of it. It's not. Surprise. As we saw earlier, the market went up 3% compared to the blue line you see on 2019. All right. So I pulled out this one this morning, so it's fresh. Now this is the average price growth. I want you as a real estate investor, savvy real estate investors, not to pay so much attention to the blue line that has a lot of up and down, but pay attention to the orange one. Keep in mind that I'm talking about buy and hold. I'm not talking about flipping. Flipping right now in this time might be a little bit dangerous, but buy and hold, we're talking about buy it today and hold it for 3 to 5 years, easy. And that's after that is your exit plan. I'm also using another media, we call it Broker Bay. I personally like to call it Real Estate Agents Underground Network. This is not visible to public. It's very much exclusive or private sales that happening here. This is another tool I use for picking the good properties. Here's another way to, this is coming from Broker Bay. If you look at right side of it. It's a broker bay, because broker bay also going through a lot of transaction. This is another second opinion of what's going on with the market. And as you see, the market is slowly picking up. If you look at the blue line is the showing. So number of people came out, start looking for a house is growing. So that shows people getting more encouraged to step out and get on to their life. The orange one that was flat around April start picking up slowly, and that's the number of offers. So people come up with offers. And believe it or not, because I do investment, I'm a real estate agent, I come across many multiple offers these days. Surprisingly, I see 17 offers in one property, 34 offers. It's all over. Of course, the property should be beautiful and well priced. New building projects, just wanted to bring up to you what's happening fresh. Like I get them every single day. This is a new project happening in Milton. I was surprised. These are nice townhouses. If I'm not mistaken, many of them are sold already, but they are open in different phases. I find the price is good, and they're going very fast. Another pre-construction project that I found it attractive. If you go back here, by the way, you're going to see the down payment looks like something around like 10% down only, which is good, not 20%. There are 3 projects happening in Vaughan, and 2 of them are Etobicoke. They also have good payment plan. The one in Etobicoke, actually, we don't have it here. Oh, here.
Hi, hello.
Yes.
Can you go back, please, a little?
Yeah, this one?
Is it this one?
Okay, I'll go back here. Are you talking about new building projects?
Yeah. Okay, yeah.
Okay.
Continue.
So,
yeah.
okay,
Okay,
this came up on the market a few days ago, open to VIP agents. So I grab it, and I'm working on it. This is the townhouses that are opening on the south side of Milton, on Brampton and Bronte area. This is a brand new area, and these are coming by the builder at that end. The deposit structure is very interesting. It's only 10% by the time you're taking over. The closing on this one is going to be end of 21, beginning of 22. And many of them are already sold out. So this is the project in Vaughan. They are asking for 5% down per year only. So it's going to finish on 23. Etobicoke, Notting Hill, Zora, give and take, very much the same thing. Is another structure for Zora and Notting Hill. The down payment, the deposit is very easy, 2,000 now, 5%, 30 days, but they also changed this one now. See, because people are afraid of COVID-19, they are less buying condos. So the builders, they are more flexible to give you a better deal. Now this is what I refer to for if a real estate investor, real estate agent investor is familiar with this. This is what I check all the time. It is what we call home price index. It's published once a month by Toronto Real Estate Board. And this is reflecting to April 2020. And for instance, if you go to Brampton, which part of Brampton would you like to invest? Now, if you look at the 10 years growth, let's say the second line here is Avondale. The price went up 141% after 10 years. That is phenomenal. Now, the average price in that neighborhood is around 771, which is great. Now, if you want to also find another property, like you cannot just go because you think Brampton, do I have anything? Yeah, listen, this is Mississauga. You cannot just go to Mississauga and grab any home from any neighborhood because you feel is good, is nice, let's buy it. What I do with my investors, I will bring it here and said, okay, let's take a look at different neighborhoods, see which neighborhood is growing well, and buy it there. So that's where I'm looking at 10 years growth. Sometimes I'm looking at 5 years, and because we talk about buy and hold. So this chart, for instance, can save you a lot of money. We have it for everywhere. So this is Milton, this is Burlington. They are all growing well. So why should I come to Milton and go on Nelson neighborhood? And it's very expensive too. When I see 72% growth versus I can go to another neighborhood And listen, I'm not after neighborhood. I'm after making wealth for my clients or for myself. So it doesn't matter which neighborhood I go, as long as I see there's a huge growth happening. Look at Burlington, 136% on Palmer. Palmer is a good neighborhood with nice schools for kids. So they are all growing. Now, since we are getting close to the end of our webinar, I want to just let you know, if you're interested in learning materials, I have a ton of videos that I recorded for investors on my YouTube channel. I suggest you to go and get subscriptions, click on subscriptions, and every week or every second week, I come with a new information video for whoever is interested. I also have my Facebook for investors. There are a lot of articles. Sometimes they have good properties coming up. You're going to see it there. And you can always ask questions. Someone's going to help you and answer those questions as well. So this is free as well. I have my own training material that is online, and it would cover everything, including joint venture and some of the contract that I put in there. If someone's interested to joint venture, need those forms, you can get that forms done between you and your partner, get it to the lawyer and get it signed. It's in there. There are a lot of other materials, such as how to find your properties in a good neighborhood that is growing. Don't buy properties that doesn't rent, for instance. So there are a lot of materials in there. I publish few of my books, and they are all in Amazon.com. Some of my clients, they asked me to put it up there. So if there was any investors interested in my webinar, they can always go on Amazon and grab them. By the way, a digital version of this book is also in part of my training material for free. There are some tools that are free on the market. You can always go and use it. My personal site, Unique Homes for You, I have a section for calculator. You can go and use it. I use them on a daily basis. Some of them would give you land trust. Like if you go to mortgage loan calculator, it will give you everything you need to find out how much that home can cost you, and the tenant, how much they're going to cover your mortgage and everything. Now you have rental property calculator here. You can go to this site if you want. I can always send it to you, and you can go there and easily do your calculation. Do not do real estate investment without doing your calculations. That's important. There's another site that I find you can use it. You don't need to be an agent, called listing.ca. It usually gives you a little bit of history of the neighborhoods, the growth as well. So that's a good tool for you to use, and it's free. Then we have another site. I think they are Americans, but they are doing certain activities here in Canada as well. What they do is they call it tenant screening. You can trust. If you pass all the information of your tenant to them, they would screen your tenant. If they approve it, and the tenant, let's say on the second month, third one doesn't pay, they would cover the pay for you. If you need to vacate the property, they will send a paralegal to take them out. Any question at this time? John, do you have any question for me?
No, not at this time. I think you've given us quite a bit of information to digest. I did want to leave everyone with just a small piece of information that when you are shopping for a mortgage, keep in mind that not all institutions are equal, that some institutions look at an investment property different than a principal property, so rates may vary. Some of them will carry the same rate as a principal residence. Also, what you see as a rate, and you may be attracted to it by being low, look at the qualifications that require for you to meet in order to get that rate. This is important, especially with investors. A lot of them are looking, obviously, for great savings on rates, but you got to keep in mind that who's ever lending you the money is going to be looking at the risk that they're going to be exposed at. So the neighborhood, the amount of money you put down, will dictate what kind of relationship that lender will come into play with you. And I would recommend that anyone is looking to invest, you can go as low as 5%, and that will be one rate. It's considered a high ratio mortgage. And obviously a better way to go if you had 20%. I know that in most cases, most investors may not be in that situation. But again, treat each investment, each lender based upon their own merits as adverse to painting everyone with the same brush.
John, one of the questions we have here is, apart from rates, what is the other qualifications or interesting things we should check that is important for the mortgage?
Well, I think that a lot of us tend to go, when I answered the question on the beginning of the transmission, most people that come to me, they say, John, I want a 5-year fixed rate, you know, but most of us don't really know what's going to happen between now and 5 years. So look at the penalties if, God forbid, you have to break the rate. Look at your option if you have some extra money that comes into play and you want to add to making an extra payment. But these are all little factors that add up. Sometimes some of the lenders will let you port. Most of them do. Some of them will not. Some of them, for example, HSBC has one of the highest penalty for breaking a mortgage. Some other ones are a little bit more kinder to us. You know, they may do a maximum of 3 months. So it's the small fine print of what most people don't ask or fail to ask that is going to determine whether you got yourself a product or a good product or not. Because saving on the rate and then having to pay a fortune to break that mortgage, you probably are a losing scenario when it comes to that particular aspect of things. So you thought you won, but at the end, it was the bank or the lender that won.
Okay, excellent. Yeah, thank you very much. If anyone has any question, you can always call me. As I said, there are a lot of people calling me every day, 647-407-4049. If you are interested, you can also email me at deltaland123@gmail.com, and I can help you with your investment. I have my own team, actually, if I can refer you to them. Just send me your information, your question, and I can help you there. And thank you very much, John, for joining us today.
My pleasure.
And hope to see you another time.
Likewise. Have a great evening, everyone.
And everybody, thank you for joining us.